Hi, my name is Kunal, and welcome to the Geeks of the Valley podcast, which connects with some of the brightest minds globally who are leading their respective industries today to discuss the hottest upcoming industry trends and how their work is affecting the global economy. This morning from the San Francisco Bay Area, we have a very special guest joining us, who is a successful Silicon Valley venture-backed operator with 5 back-to-back exits to date, and is the current founder and managing partner of AiSprouts. Please welcome Suman Talukdar. Suman, thank you so much for joining us today.
Hi, Kunal. Thanks for having me.
And how are things with you in light of COVID?
Good. We are all doing our best, to stay sane and be grateful if we're healthy.
Let's jump into the first question here, shall we?
Sounds great.
Tell me about yourself and your background and how it led you to the path of becoming a VC.
So I've had a kind of a windy journey here, definitely not a straight line sort of path. So I moved to the Valley back in the late 90s. So this was tail end of the first internet revolution, if you want to call it. And, literally I was undergrad in college and was reading a lot of Wired magazine. At the time, a lot of the same information that we have today on the web that's easily available was actually not the same back in the late 90s. So anyway, I moved to Silicon Valley in the late 90s after finishing my undergraduate and had kind of like a typical sort of Valley job. I was an engineer. Actually, one of my first bosses was a gentleman who later became one of the founders of Siri. But regardless, I moved out here because everything that was happening and wanted to be part of it. And, that's basically been my kind of the consistent thing over the last 20 years. So as I moved here and I found out about how, innovation really takes place, I learned about this thing called, venture capital. And, for my undergraduate university, I went to Rice in Houston. There was actually a pretty good scene of venture capitalists that were in the area. And so I was fortunate enough to stumble into a couple of them, get to know them. And they really opened my eyes in terms of kind of like the impact that venture capital had in the economy and, the role that the individuals can play in really bringing some, breakthrough ideas to life. So in the back of my mind, I didn't really know like what the path to get in was, but it was something that I was always really interested in. And I just kind of pursued that vision through the rest of my, professional career. So it literally took me, probably about 20 years to get there, to be frank. But, my path was basically, after I'd done reasonably well as an operator, as you mentioned, I had, a number of back-to-back exits, a couple IPOs under my belt. I started to get involved with, my friends who were starting to do, entrepreneurial endeavors or pursuits. And so I started to get involved with them, started to write, a few checks here and there as an angel, and started to recognize that I sort of had a knack for finding not just interesting ideas, but having a sense for kind of the good people that would be the right leaders for those types of ideas. And that's basically my path to venture. I became a good networker, was able to convince people to let me get involved in their companies. People invited me to help them out, started to write some checks, had a couple exits under my belt. And before you know it, decided to start this fund, and here you go. That's probably 20 years summarized.
That's quite an interesting background, and you seem like quite a veteran in the industry. I mean, especially with the 5 back-to-back exits that you've had.
Yeah, I would say that was a result of like the last, 10 years of the business cycle. I moved back to the Valley after finishing my BA at Harvard and, literally just was at the right place at the right time. There's a lot of interesting new companies that were, starting to pop up working on SaaS, right, and leveraging the cloud. And so, when you're at the right place at the right time, you're able to sort of stumble into interesting things. And if you work with good people, you get some good outcomes. And And that's basically was the story with these 5 companies that I was able to get involved with.
So Suman, you're currently the managing partner and founder of AiSprouts. What is your ticket size around? And what is, the fund's investment philosophy?
Yeah, so basically AiSprouts is a pre-seed fund. So we're looking to be either part of the first group of sort of institutional investors that invest in a venture, or potentially be the only institutional investor that invests in a venture. And typically write, anywhere between $250K plus per company. And the focus of the fund is basically companies that are applying machine learning. And, my story there is that, back in, 2014, and I had this epiphany that over time it would, just like everything else in software, it would actually get less expensive to write, technology or create products that are, leveraging, if you want to call it, deep learning and leveraging machine learning broadly. And so at some point there was going to be companies that I would start meeting that had a handful of founders, were actually generating revenue, had traction, and you potentially be able to start investing in those companies at that stage. So that was kind of the premise of the fund. And after doing a bit of, angel investing into companies that kind of fit the thesis, I decided that it was a viable model to actually start investing at scale. And that's how basically AiSprouts started. And so it's it's this fund that right now we have a handful of companies that are part of the portfolio. They're all backed by amazing founders that have really great traction. We participated in rounds with other well-known investors that potentially have deeper pockets, and have really good aspirations for what their outcomes can be. So that's a little bit about the fund.
And as you mentioned earlier, you've been in the Valley for kind of the past 20 plus years as a venture-backed operator. In your eyes, what makes a company successful?
Yeah, no, that's a really good question, and I think I would kind of think about that phrase like beauty lies in the eyes of the beholder, and I think I think people might give you different answers based on their experiences. But to me, there's actually like 3 factors that have really kind of stayed consistent in terms of companies that I've seen be successful. So first, I mean, it's pretty obvious. Like, I think people are like super critical, and all of the ventures that I've been with, their degree of success was directly correlated with the quality of the founding team. And, quality had to do with, their level of commitment to the idea, their vision, level of energy, how thoughtful they were on what they were on managing their business, general kind of style of like managing a growing venture. And those things all lined up, with generally really strong and positive outcomes. The second thing I would say is like all the ventures, I think, had a clear perspective of their product, and maybe that's a sort of related to when I got involved with these ventures, but basically they all had a clear sense of the problem that they're trying to solve for the customer and how they're going to deliver a solution to that problem. And they'd actually been in market with something that was somewhat working. And by working, meaning it had reasonably good traction. So yeah, so those things, team, traction, and then longer term, I mean, this varied and it's related to, exactly how well the companies did. The more they had this figured out, the better they did over time. Most of the founders that I met with that had done really well or have done really well, they had a perspective of how they were going to scale the business. And it was beyond just like, how we're going to get to our first 10 customers, how we're going to get to our first 20 customers or users or whatever their metric was. It had to do with, they had a clear vision of what was happening in their industry and what it was that they were going to do that was different, that was going to make them win. regardless of what anyone else was doing. And I think that type of insight or perspective into a business takes a while to develop and figure out. But it was something that I noticed the founders that were extra successful had kind of clear sense of earlier on.
So at a high level, right? It's you look at the MRR or the ARR, right, and then the team and the product.
Yeah, and that's a good point. I think revenue is definitely an indication of traction, but sometimes it doesn't have to be. So in my experience, actually, I found usage to be actually a very, very important factor. And sometimes you have companies and business models that have high level of usage, and they just haven't gotten to the step where they figure out how they're gonna monetize this or what exactly they're going to charge a customer. And so that's actually a good situation, right? Because it's harder to almost get somebody to really use a product on a day-to-day basis. That sometimes it is to just get somebody to pay for it, and then they got to put it on the shelf. So I'd say ARR plus like the actual day-to-day kind of daily engagement or whatever metric makes sense for that specific product.
So Suman, to kind of step back a bit at a higher level, right? What are some major venture capital trends you are seeing across the globe and in the Valley when it kind of comes to early stage investing?
Yeah, that's actually a very big question. And when we talked about this ahead of time, I've been thinking about this one for a while. We're like in a very unique environment right now. If you think about what's happening in the world, obviously we talked about COVID in the beginning. We talked about, the massive sort of boom we're seeing in the equity markets. It's just, I hate to use this word, but it's kind of like a strange environment. It's not, there's a lot of extremes and we're all sort of trying to do our day to day in this kind of environment where, there's a lot of variability or volatility. So I would kind of frame my answer from that perspective, right? And the reason I say that is we're not in the same kind of environment that, maybe we were like 5 years ago, right? Or, like this is different than 2008, when we had a big sort of recession. So it's, given the unique environment that we're in, I'm actually seeing that there's a lot of interest in venture capital, and which is kind of struck me a little bit because in other times, like I was actually in the Valley in 2001, there was like a big crash post the .com bubble, and like 2009 when a lot of people started leaving California. You always saw kind of a little bit of sort of the air come out of this whole thing, and people get a little bit pessimistic and wanting to get less involved. And actually, what's surprising about this whole situation today is it's actually the opposite. So, there's a lot of things and a lot of people around the world that, are struggling, companies that are struggling, but tech has just continued to just plug away. And obviously there's kind of winners and losers in tech. And so some companies are doing super, super well, and the other ones are kind of trying to adjust and figure out. But this engine that is driven by kind of this underlying sort of growth or productivity that tech enables is not really stopped. So I would say that venture capital or the interest for people to continue to make investments, it's pretty strong, very high. And I would say that the level of interest in sort of people to enter this the space as an investor is really high. So for example, emerging managers like myself, we think there's a big pool of capital that's out there that wants to get the types of opportunities that we're seeing, kind of the returns of, like the Twitters, the Slacks of the world, where, like $25,000 early on would have been like $40 million returned. So I would say that, I think we're in a dynamic environment where there's a lot of interest in innovation, and but that interest in innovation is actually, being very carefully sort of filtered and judged, so that people are getting into like opportunities that they really think are going to be successful in the long term. So yeah, some of the trends some of the things I'm seeing is obviously if you're a large fund, like the brands, the blue chip brands of the world, Sequoia and all the names that we know. Those guys are tending to invest in sort of companies that are probably a little bit kind of more developed. I think the appetite for taking kind of like super risky early stuff at the A seems to be, a little bit less than before. But at the same time, you now have all these like smaller mid-sized funds that are coming in and are doing interesting deals in the seed stage, et cetera. So from my perspective, I think, people are adjusting to this world of, Zoom meetings, et cetera, and trying to sort of move forward in a business and usual capacity. And, but trying to sort of find who are going to be the winners and back the winners that are able to adjust in this kind of environment.
Yeah, I have to say the trends are a bit interesting, right? You're seeing a lot of VC funds that are now, right, investing, via Zoom and just investing based off a Zoom call, right? And what is your perspective on kind of losing that human touch, human to human interaction?
Yeah, I think it's tough. I think I've been doing a lot of stuff over Zoom, and when you have clear metrics that you look for in a company, and you can call a customer, and there's a lot of stuff you can do remotely to sort of evaluate earlier stage opportunities. But I think when the check sizes start getting bigger, like potentially like the traditional Series A and B, I think you start losing some degree of information by not able to engage with the team in person. So I'm not necessarily focused on that stage. I would obviously defer to, individuals who are investing at the Series A a lot to ask them, how they think about their decision before and what they think about their decision now. But through the grapevine, I do think that, there's a lot to be learned when you can walk into somebody's office, meet the founder, see, how they're running the business, see how the team operates within that environment, have a face-to-face discussion with them. I think that adds a bit of information that, you still, it's something that you require. So for me personally, I found myself do a lot of stuff over Zoom, but then, if the other person's willing to and the opportunity arises, obviously all at a distance, I'm, meeting them, trying to at least be able to, connect with them in person for the final closing, et cetera. But yeah, it's definitely a challenge, and I don't necessarily think that the world is going to move to only Zoom. I think people are still going to want to meet with person and spend the time, meet with other people and spend the time.
And when it kind of comes to specifically focusing on financing rounds, right? When investing in startups, you kind of focus on safes, convertible notes, or some sort of equity investment. What are the financing rounds you see in the industry today, and what have you kind of typically done?
Yeah, no, that's a great question. I think this, I'll speak directly in terms of the stage that I'm focused on, which is kind of pre-seed and seed stage companies. So what I've generally found is that the pre-seed companies that are still, maybe not 100% sure about all of the runway that they'll need to have to get to the next milestone, they're usually raising money on safes. And that's actually part of, it comes from the fact that a lot of these actually are like Y Combinator type companies anyways, right? So I think for the pre-seed has definitely been safes. And then, as the companies get a little bit further along, then I'm actually, especially in this environment, I've actually been seeing a lot more the sort of priced rounds. So I think investors, knowing that a company has some traction, having visibility into whatever, ARR they have, maybe it's backed by an institutional investor that's putting anywhere north of 2 million, 3 million, maybe 4. They actually prefer this kind of like priced equity to actually value the business. And they like to have kind of those shares that are going in their name. So I think both of those things make 100% sense to me. I think in this environment early on, obviously you want to raise money, you need money to survive, you need money to grow. So the pre-seed stage, it kind of makes sense for individuals to, give preferences to some of their early investors, maybe give discounts to the next round, or a cap on a safe note, as an example, to give some level of reward for people who've taken earlier in the risk earlier in the venture. But I think over time, you want to be careful, especially the early stages, to not limit yourself, because there's a lot of things that you don't know in the business. And then these priced rounds, at the later stage, make a lot of sense. The other investors want to guarantee their influence in the business moving forward. They have, their fund thesis based on the amount of capital they want to deploy in a company, has a specific amount of ownership that they want to attain. So those two models have been basically everything that I've seen since the beginning of 2020. And the trajectory that I've sort of, before this whole, the 2020 situation happened, I think I was hearing a lot more people try to push safes at a later stage, because there was, the belief that there was plenty of capital around. But I think now that's definitely changed, and we're sort of shifting to more kind of discipline around like pricing, definitely seed and seed onward. So that's kind of been the two structures that I'm familiar with, and are definitely, I'd say, the preferred models based on where you are with the business.
So Suman, other than financing rounds, there are a lot of other interesting forms of investing. And there are a lot of up and coming forms, such as around family offices, and many FOs are kind of now moving into VC investments as an alternative way of investing into another asset, or acting as a fund of funds. What is so interesting about what FOs are doing, and how do you see them playing a role in the bigger VC space?
Yeah, and to clarify, FOs, you're talking about family offices, right? So your acronym.
Yes, correct.
Okay, got it. Yeah, I think that's really interesting. I think this is probably something that has emerged with kind of the mainstream adoption of venture capital, right? So just to go back to kind of my story, right? Like when I moved here in the late 90s, I think if you were in Silicon Valley, you grew up here, or you went to Stanford or Berkeley or one of the schools here, you sort of were pretty familiar with the venture capital model, right? You Kleiner Perkins, Sandhill Road, you know who they were, right? And what's happened over the last 20 years, right? That sort of kind of industry that was predominantly Sandhill and a bit of Boston has massively grown, right? And now it's become a little bit more mainstream. People know about venture capital. It's not like your typical, list of suspects of endowments, et cetera, that's in, these few venture capital firms. I think more and more people have realized that there's really good returns that one can attain over time that are uncorrelated, and they want to basically go after this asset class. So I think that's kind of what's happened. And so, you had kind of this sort of massive growth of, venture funds, and not just in the US, but globally. And more and more people have gotten aware of, what the gains are, and also the type of work it is, right? It's interesting to find these like breakthrough ideas that could be like the next Tesla or whatever, and get in the ground floor with them, et cetera. But then I think what's happened on top of that is you've obviously had all of this like, massive, like trillions of dollars of family office money that has been, gradually growing, and assets that are available to invest. So I think a lot of the family offices have just, wealthy individuals or groups of individuals that have realized that they have, capital to put to work, that maybe some of it is already passively being invested in some venture funds that they know, but that is not necessarily, meeting all of their needs, right? And not in any kind of negative way, but, basically maybe they're stumbling into other opportunities. They're, well connected in the entrepreneurial environment, and they see opportunities to play. And instead of just sort of like punting from those things of like, hey, I'm already in a venture fund, I don't need to invest in this. I think they're considering the option, right? And I think that's what's sort of been happening, at least with the groups that I'm engaged with and I see. I think they're interested in sort of, emerging managers, ideas that are a little bit like off of what they normally are just typically seeing. And they have the resources, they have the sophistication to participate, to get more involved, and they see tons of returns that can come from sort of participating. So I think that's probably the trend that's happening with family offices. What happens though, it's over time, like the more involved the family office gets, either they'll have to end up kind of running like a fund themselves, or they'll have so many other things going on that they're just not going to be able to, sort of spend the same amount of time on one thesis as they were with another, right? You kind of have to like specialize or something. So I don't think they're in any way, replacing or being an alternative to the traditional venture capital model. I think what's happening is they're becoming a strong complement. And I think it's great for innovation. It's great for the industry. I think it just provides entrepreneurs another sort of contact, another resource, another backer to approach as they look to start the business. And, those backers might have slightly different perspectives from a venture fund that, depending on where you are, might be better suited for, what you're trying to do, right? So, family offices sometimes have longer time horizons. They have related businesses. And so I think it's all positive. And I, in the way that, in terms of the role that they can play, I think venture funds and the great venture funds are going to always be there. There's always going to be new ones. There's going to be the next up and coming player. There's going to be sort of, changes and kind of like the top 10 is just like what's always been happening over time. And so I think, that's going to continue to happen. I think where family offices will come in is that they'll have sort of more involvement in that, right? So then they can start to, maybe they'll be backing different funds, or they'll be involved in companies' earlier stages. And when you're talking about family offices, there's a lot. You're talking about like trillions and trillions of dollars of assets. So it's really hard to categorize into one thing, but that's actually the opportunity. I think there's going to be plenty of sort of money and pools of capital that entrepreneurs that eventually will sort of go back to the traditional sort of VC path or route will be able to play into. Last comment I want to make on that is I think the role of family offices and how they can play depends on stage, right? So a later stage family office investor has a different potential profile and has to work with a different group of investors or individuals than a family office that's more interested in smaller checks, at the earlier stages, and potentially, taking on a little bit of less capital risk. So there's things like that I superimpose on top of, just a question of like family offices and venture capital, because, venture capital has got a lot of different investment thesis, fund sizes, investment styles. And so I think the opportunity for family offices that they can, depending on who they are, they can decide to pick and choose exactly how they want to participate.
Right. That's a good point and good perspective that you brought up there. Now, we spent this whole call talking about venture capital and venture capital trends in the industry. And I want to really spend these last two questions talking about life and career advice. So how did you think about your career choices in life?
Yeah, no, that's a great question. I always like to talk about that. But it's interesting. I think the world's changed quite a bit. So I think, when I think just as an individual, I think everyone goes through different inflection points. One inflection point where you really start to think about your career long-term is like when you're finishing college, right? Sometimes that happens for people a little bit later. Maybe it's after you leave grad school or you have your first job and then you start thinking about it. But for me, it happened when I, finished college. And, at the time, this whole kind of technology, venture capital, Silicon Valley thing was very much a geographically constrained trend, right? It's if you wanted to do Silicon Valley stuff, you should move out of here, right? And you should get involved, drink the culture, really understand what's happening. And that was kind of the way to be exposed. And I think that's actually changed now. So I would say that whole kind of idea of Silicon Valley now has become more global, right? So I think that culture, if you want to say constrained before to 100 miles within the Bay Area, right? I think is now expanded globally, right? And there's pockets of that sort of all over the world. So I think my advice and kind of, just general career advice to people is like really, don't kind of get rid of like your preconceptions of sort of what you think like works and who you need it to be in order for it to work, right? I feel like the world, is in a massive transition and in a mostly positive way. And, the types of opportunities that, I'm assuming a lot of the individuals that listen to this podcast are interested in are actually more and more available like around the world. And so, having that sort of clean slate perspective on, learning from, other people's successes, right? Like, so I'm, reasonably successful person, there are people who are like super, super successful, right? And all those things can be, good sort of inputs to you, right? As you're looking to develop your career. So like take all of that information, but they realize that like, the world is different. I think there's more opportunities that are available close to wherever you are. And then you'll carve out your own sort of path in life. And it doesn't necessarily have to follow kind of these templates, right? That sometimes, a lot of people feel like, hey, this is the template that somebody needs to have to do this. And, if I don't do this by this time, then, I'm not going to, and I think, obviously there are paths that have been shown to work, but I think be open to just like seeing what's out there, seeing what's different, and like being, understanding how you can leverage that to get where you want, right? And I think that's a huge opportunity for anyone that's, starting out their career or starting out a business. It's like you don't necessarily have to replicate what you've seen work for others, right? You just have to understand that those elements are now more broadly available and you can sort of harness them in your own way.
So I know you alluded to this a bit, but what piece of advice would you kind of give to our listeners out there from the journey you've had, thus far in life?
Yeah, I mean, I think, I'd say there's like three things super technical, because a lot of times when you give people advice, they're like, okay, great. And like, what do I take away from that? I think there's a couple of things that I've learned that regardless of what you choose to do or what you're doing in life, I think can be helpful. So one is, always be curious. I think curiosity leads you to ask questions, and asking questions leads you to kind of look at the world differently and figure out sort of what are opportunities. And that's actually a great source of ideas. That's the source of entrepreneurship. And eventually that creates a lot of like progress and growth for yourself and others around you. So I think that's one, curiosity. Two, it's, your success in life is largely based on other people. So like relationships and being really like conscious about the relationships you're creating in the long term, I think are really, really important. So, I've always looked at people I meet as people that I would hopefully, not keep in touch with. Obviously we have a finite amount of time, but I think that sort of view on life helps you learn from people, helps you kind of break any sort of mental boundaries you have in your mind about what's working, what's not working, and it helps you sort of live in a way that makes kind of the future a little bit more realizable, right? So because you're working with people that are sort of aligned with the way you work. So I think that's two. And then the third is, I think I'm a big believer that it's not about the results, but it's like how you achieve those results. So I think kind of not the ends, but the means, and to focus on those. And, as the world, as we have to maneuver through all these things, right? So like, my fund is focused on AI and automation and, the next generation is going to have to think about that. There's going to be things that you think you're going to do, and they're going to be kind of irrelevant. I mean, it's stuff that we're starting to think about all the time. I think you really need to sort of focus on just how you're approaching sort of solving problems, how you're doing them in an ethical way, with the idea that, hey, you've sort of figured out an approach that's reliable, that you can repeat over and over again. And that itself, you sort of have to trust that'll get you right. And I think kind of the previous mindset, I think even in my career path, I've been fortunate to have less of that. But probably, parents' generation, grandparents' generation, they probably face more of that, where, a lot of things were excused just because, it achieved a certain result. I think that type of mindset is very short-lived. And we're gonna be juggling a world where we're gonna have to make a lot of trade-offs, economic benefits and repercussions being one of them. So I think sort of really having a focus on how you're trying to accomplish the things you want to accomplish is going to serve you well in life, regardless of what you want to do. And especially if you choose to do this kind of this track that's entrepreneurship, technology, trying to be a geek in Silicon Valley, to use your podcast name. I think that type of mindset, I think, is really going to help you figure out the things that are going to be, really the next big thing or the big idea.
And Suman, for people who are interested in reaching out to you, what would be the best point of contact?
Yeah, no, I think that's what's amazing about the world we live in today. It's super easy. I'm literally like one click away, right? So there's a few ways to get in touch with me. So I have a Twitter handle, so you can look me up. Suman Talukdar. It's STSWWW. Also, I'm on LinkedIn. So obviously, you're going to post this thing off your LinkedIn feed, so you can look me up through that. And you can also go to my website, which is AiSprouts.vc, and contact me through there.
Suman, it was a pleasure having you on Geeks of the Valley, and thank you so much for joining us today.
Thanks, Kunal. Thanks for taking the time, and best to you for the rest of this year and moving forward.